This is the Asia Trade. I'm Annabelle Droulers in Sydney.
I'm Avril in Singapore. The top stories this hour. Asian stocks set for declines this morning as traders gear up for key economic data out of the U.S. that could help shape the Fed's outlook for next year. President Trump says a deal to end Russia's war against Ukraine is closer than ever as Washington offers more security guarantees to Kyiv. And anger continues to simmer in Australia after a terror attack in Sydney left at least 15 people dead. The Special Envoy to Combat Antisemitism in Australia joins us later.
In terms of the markets today, we are going to be very much looking for a day to the downside following what we had on Wall Street overnight. You can see the ASX 200 opening fairly flat this morning. But again, it does seem like investors are a little bit wary of taking too many directional bets, essentially, because you've got that key economic data coming up from the US, including the jobs report, of course. But then also adding to it, you had the data from China yesterday, and it followed or showed further signs of weakening across the economy. So that is sort of setting the direction for trading today. We're seeing futures here again, not too bigger moves essentially. The Japanese yen continuing to hold fairly steady around that 155 mark as we await, of course, Avril, that key BOJ decision later this week.
Yeah, Belle, to your point about the macro events this week, I think that is what played out on Wall Street overnight, where you saw traders perhaps choosing to book profits ahead of these data points, the BOJ even this week, in the last trading week that is a full one for the year. So we saw stocks, bonds, the dollar under pressure, tech extended the selling. We see this continue on, right? From last week, those concerns that surfaced following Broadcom, Oracle earnings. The question going into 2026 is going to be the extent in which investors are going to be okay with these valuations on tech names, Belle.
Yeah, and I guess what else plays into that is also the state of the U.S. economy. And to that point, we have the key U.S. jobs data that's coming up later Tuesday. So you've got non-farm payrolls. They're expected to have grown at 50,000 in the course of November. That's according to our medium survey. And then also the unemployment rate seen clocking in at 4.5%. So that would just be a continuation of what's really been a months-long upward trajectory. But it would be going back to the highest level we've seen since 2001, or 2021 rather. So it's certainly going to really set the scene for where we go with rates next year, even though it is important to note as well, this is not going to be a complete report, because you can take a look at this graphic as well that also just shows you certain data points are going to be missing from the figures, October data, of course, and that comes down to the impact still that we're continuing to see from the US government shutdown.
Yeah, I think those gaps in the data from the government shutdown are closing, but you still have some of these blanks, and that speaks to this division in the Federal Reserve, the FOMC. We've heard from some of these Fed speakers following on from the cut last week, hearing from the likes of Susan Collins, for example, saying, yeah, they supported that rate cut, or she supported it, but that going forward is going to be even trickier, the expectation of elevated inflation. And then you hear from the likes of John Williams as well that they are, because of the rate cut last week, well positioned for policy into next year. Now, on the issue of inflation, price pressures, certainly we also heard Stephen Myron weighing in. Take a listen.
There was a large bout of inflation that resulted in an increase in prices after the pandemic. While American families are still rightly distraught with that experience and unhappy with affordability, prices are now once again stable, albeit at higher levels. Policy should reflect that.
Let's get more markets perspective and bring in Rebecca Walser. She's CEO of Walser Wealth Management. So, Rebecca, thanks so much for your time this evening. And I think we can start there with the direction for the Fed, because I see in your notes that you're writing that Trump is going to be having his man next year. And we know that there's that expectation that we'll have essentially Trump appointing someone who's going to really back that case for further easing moving forward. But do you see any risks as well around Fed independence being tested, and that may be playing into some volatility?
Yeah, I mean, I definitely think that the independence of the Fed is definitely being tested during this administration. But I really think that we are seeing such a divided Fed. It's really unusual during a 6-week period between the October FOMC meeting and this last week's FOMC meeting that we saw a skew of only a 20% probability of a 25 bit cut all the way to a 90% probability in that 6-week period. That's letting us know that there's something going on fundamentally at the Fed. It's a very, very divided Fed, with the presidents being a lot more, they're calling them the silent dissenters, more wanting to stay the course and kind of maybe save up some dry powder and not be so aggressive in the cutting. So even with Trump getting his man in May of next year, unless he really skews the rest of the board to his position to be more dovish, then I think he's going to have some problems getting all of the policies and the accommodation that he's really looking for.
What do you think that the economic data is going to be telling you, though? Are there any signals you're going to be watching in particular that would corroborate the case or the need for further cuts?
I mean, I think to your point, us getting the big jobs numbers that we didn't get because of the shutdown for October and November tomorrow is really going to give us a clue. I really will note that Chairman Powell talked after the FOMC meeting last Wednesday about the fact that right now, since April, we're averaging about a net positive 20,000 jobs a month. He thinks that's overstated by 60,000, net positive 40,000. He thinks that's overstated by 60,000, meaning that we're losing 20,000 jobs a month. If that's the case, that will show a lot more labor weakness than we've been pricing into the markets. And that would indicate again further that the Fed should be more accommodative and more dovish. We already have stopped what we call quantitative tightening, and we've already moved to a version of quantitative easing. And so, small caps, all of those things are really enjoying that. But the fact is that the Fed has really already turned accommodative beyond just the rate cuts.
So how are you positioning then in markets? How are you allocating?
Yeah, for right now, outside of Fed policy, we're really looking to make sure that our clients are participating. We've had some of the most largest, annual and 1-year period wins of different winners that have gone up, 20, 30, 40% this year alone, especially since April after the tariff, mishap. Everyone kind of over embellished the tariff impact, and really the market took a dive since April. So we're kind of looking at numbers since April. We've had some really great winners. We love that for our clients. However, we still have to constantly educate that this is the beginning of the monetization phase. It's going to take a lot of time, and it's going to be what we would consider prickly. It's going to be 2 steps forward, 3 steps back, 1 step forward, 2 steps back. It's going to be painful for investors that think it's just going to be straight up and to the right on the markets. It's not going to happen. We're going to have some struggles and some volatility along the way. And as long as investors are participating on this new frontier of technology with that understanding, then hopefully they'll be able to stay the course. What you don't want to do is get investors to basically say, hey, like 2001, 2002, 3 years of S&P negative returns in a row, which had never happened before. People got out of the game and then missed all of the recovery of the dot-com monetization. We don't want that to happen, but we do have to pair that with hard assets and commodities specifically as we're making this currency transition to the blockchain.
Yeah, so maybe to your point about high risk, high reward, but what about the valuation risk? And does that maybe make investors take a second look at the smaller cap names in the market?
Yeah, I mean, I think small caps, they haven't done so great this year, but they certainly turned positive as the Fed went accommodative last week. So, obviously 2026, if we do have a very accommodative Fed, that could be a great year for small caps. However, we also are looking for AI to broaden out beyond just the hyperscalers. We saw a lot of deal making at the commercial, industrial level between hyperscalers, all of them kind of investing in each other, taking equity stakes in each other. That's all great, but we're really looking for that to broaden out and come down to a more retail level beyond just ChatGPT. So as long as we can see actual momentum of moving down to actual functional use beyond just a chatbot and, asking for medical diagnoses of your kids and not taking them to the pediatrician, as long as we can actually see beyond chatbot usage, we'll really feel good about the pace of the monetization. But certainly if we keep a accommodative Fed, small caps will have a good year in 2026.
All right, Rebecca, good to chat. Thanks very much. Rebecca Walser, CEO of Walser Wealth Management. We have more ahead on the Asia trade. This is Bloomberg.
I think we're closer now, and they will tell you that they're closer now. We had numerous conversations with President Putin of Russia, and I think we're closer now than we have been ever.
That was President Trump there on talks to end Russia's war in Ukraine, and US negotiators have offered more security guarantees to Kyiv. This is part of Washington's push to end the war. Let's get more with Michael Heath joining us now. And more concessions, but it still seems like they're stuck on the issue around territory and is land going to be ceded or not, essentially. Yeah,
it's exactly right. I mean, what President Trump says there is right in a way. I mean, Ukraine really needs some sort of security guarantee, some sort of reassurance mainly from the US, which has the power to scare off anybody, which it's got now. You know, the reporting we have is that it's an Article 5-like guarantee, which, you know, is NATO's will support each other if anyone's attacked. But at the same time, they're still wanting Ukraine to give up land that Russian forces haven't managed to occupy in nearly 4 years. And not only do Ukrainians not want to do that, that's, you know, constitutionally they can't do that. You know, they'd have to have a referendum, all sorts of processes to do it. And Russia, meanwhile, is sticking to maximalist demands. So while Ukraine's probably come to the party and in a sense, you know, Washington and Kyiv have bridged their gap, that takes the whole thing further away from what Russia wants. So, you know, as you get one part closer, it moves away from the other part, and vice versa. So, look, it's difficult to see that this will actually cause a breakthrough unless there's some dramatic change from Moscow. I mean, as the Europeans have said, you know, this is a pretty significant day in terms of the guarantee and the US providing it, but there's very little progress unless Russia buys in.
Mike, what are the prospects of potentially both Russia and Ukrainian leaders meeting? I mean, we've gotten the Berlin gathering, we've gotten the Moscow one, but the key players were just not at the table.
Yeah, well, look, I mean, that's exactly right, Avril. And what you're sort of seeing from Moscow, what their strategy is Russia doesn't the Russian leadership doesn't even consider Ukraine a country, so they don't want to elevate the status of Zelensky. They don't want to elevate, you know, any of this in a sense. What they do want to do is they want to keep the US at bay because they do know that Ukraine is under a lot of pressure. You know, it's got a lot fewer troops than Russia has, and obviously the US is now rationing any supplies it gives. Has to be bought. It's not given. Europe has to finance it. It's a lot more difficult for Ukraine to assert itself on the battlefield. So Russia just basically believes that the longer it can drag it out, the more it's going to win. And as long as it can keep President Trump on side, which they manage to do every time it looks like, you know, US and Ukraine are coming closer, you'll see a phone call from Kiev or negotiations or that sort of thing, and Trump changes his view as well. So Russia's, in a sense, is playing everybody along here. But what, you know, we'd have to see a change from Russia, and that would involve negotiations among the leaders. There's no question about that. But we're sort of not there, not anywhere close, I'd say, to that yet.
Yeah, I mean, it's hard not to see how Russia hasn't strengthened its hand through this process. I mean, it's arguably, you know, revolutionised or at least upskilled its military. It's got better weaponry. It's now even got the prospect of land that it never even captured in the first place. So what does the negotiation dynamic look between the US and European leaders then on this?
Yeah, well, look, I mean, the difficulty is that Europe and Ukraine are fundamentally divided with the US on this, but the US is the decisive factor for them. I mean, it just has the money, it has the weaponry, it has everything that they need. And Trump's such a mercurial character, they've got to keep on his side. I mean, Ukraine's got nowhere to go. In a sense, it's fighting Russia on the battlefield and the US diplomatically, trying to, you know, keep the US engaged there on its side. So it's exceptionally difficult. And Europe knows that, you know, if it loses the US, it's in all sorts of trouble. And this has been a Putinist strategy for the past generation, basically, is to try to divide the US and Europe and then to try to fracture Europe as well. And their bet with the whole war with Ukraine is that the West can't go for the long haul, whereas in a dictatorship like Russia you can, you know, as long as the president's doing that. Let's not oversell Russia's gains. I mean, Ukraine is a small state with not much of a military. Russia inherited all of the Soviet Union's firepower, and they still haven't gotten very far in 4 years. So it's not great, but nonetheless, all the portents are that it'll be better for them, and things are improving and moving their way. You're right there.
Mike, always great to get your insights on this protracted conflict. Michael Heath, our Bloomberg editor there. In the meantime, the EU's top trade official says China has started granting longer-term licenses that allow European companies to access critical minerals needed for industries, including clean tech, automakers, defense contractors. Speaking exclusively to Bloomberg, Maros Šefčovič also discussed ongoing negotiations with the U.S. over steel and aluminium tariffs.
What unites us is that we really need to take care of overcapacities which are destroying, the steel production in the U.S. but also in the EU. And I explain again that we adopted these very far-reaching safeguards if it comes to the imports of steel from the third countries to the EU, which are kind of very much reflecting the measures which U.S. has undertaken several months ago. And therefore, I suggested again, let's go back to the idea where we can kind of build this ring of friends, where we would trade on MFN, or zero levels, and we would have the same, let's say, measures to take on the global overcapacities. The situation as it stays right now is that I sent to Secretary Latnik the lists of the codes where we believe that we can definitely lower the tariffs. I understand there is some interest, especially from the machinery sector, but we didn't proceed or haven't proceeded yet to the very concrete negotiations on this type. So we're talking on the level of teams. We are almost, I would say, in permanent contact with my counterparts, and I think this would be good for both sides, because if America wants to reindustrialize, they need machines. We produce the machines. We are ready to send them the machines, but of course we need to find a solution on the derivatives.
And speaking of sort of rare earth minerals, this obviously has been thrust into the sort of the conversation in a very sort of obvious way now by the China. Are we getting closer? Is Europe getting closer to getting a general license from China as the United States has?
Yes, I think that there I can say that we are in very close contacts with Foreign Trade Minister Wang Wentao and also his team, so we are communicating on different levels. We had here the team from China specializing on export controls like a couple of weeks ago, and I think we are getting initial reports from our industry that they are getting these general licenses, but we need to have a little bit more granular information to evaluate the whole process. But the fact that this idea was favorably received, that it seems that we are getting first general licenses, and also that the Chinese side was receptive to our arguments that the process as it was set up in April required too much of I would say, very intrusive information, too many photographs, too much detail about the supply chains, and I think that the general licensing could be one of the solutions how to address this issue.
That was the European Commissioner for Trade speaking to Bloomberg's Oliver Crook. And some of the other top global headlines that we're tracking this morning, well, the UK has finalised a free trade deal with South Korea that London says will boost exports to the Asian market. The agreement comes just weeks before an earlier deal was set to expire. The UK says the deal will grow its services exports by more than $500 million. That's as firms get improved access to Korea's financial market. President Trump says he feels bad about Jimmy Lai's conviction in a Hong Kong trial. He says he's reached out to his Chinese counterpart, Xi Jinping, to consider Lai's release. The former media mogul was found guilty on Monday in a landmark national security trial and could face life in prison for conspiring to collude with foreign forces. The Chinese ambassador to the UK has also lodged a protest. That's after the UK Foreign Secretary Yvette Cooper called for Lai's immediate release. President Trump is classifying fentanyl as a weapon of mass destruction in his latest push to ramp up pressure on Latin America over drug trafficking. Trump allies say such a move can open up access to funds appropriated for detecting and eliminating weapons of mass destruction. The president says he's also considering an executive order for federal agencies to reclassify marijuana as a less dangerous drug.
That's why today I'm taking one more step to protect Americans from the scourge of deadly fentanyl flooding into our country. With this historic executive order I will sign today, we're formally classifying fentanyl as a weapon of mass destruction, which is what it is.
Is it accurate that you are considering an executive order to reclassify marijuana under the control?
We are considering that, yeah.
Are you planning?
Because a lot of people want to see it, the reclassification, because it leads to tremendous amounts of research that can't be done unless you reclassify. So we are looking at that very strongly.
We'll have more ahead on the Asia trade. This is Bloomberg. Australia continues to grapple with the fallout from the deadly attack on Jews at Sydney's iconic Bondi beach on Sunday. The attack sparked debate over immigration, gun laws and anti-Semitism in the country. Poole Allen joins us now for the latest. And I think, if anything, yes, we've got that debate around gun control laws, but people are also saying that even the focus on that is also shifting away from the government and perhaps that perceived lack of what it was doing around the rise of hate speech.
Yeah, perhaps the gun control laws are the easy part. Let's deal with that first. That has broad support from the federal government, from state leaders as well. There's a popular misconception around the world that it's illegal to own a firearm in Australia. That's not correct. You can. And in fact, the deceased gunman, Sajid Akram, owned 6, all 6 of which were recovered. He owned them legally. He had a license. But the feeling is perhaps these laws need to be reviewed, a limit to the number of guns you can own, and perhaps the license conditions should be reviewed as well, because circumstances change. And in the case of Sajid Akram, well, his son Nazim Akram, 24 years old, turns out he was known to ASIO, the spy agency, he was investigated for alleged links to Islamic State in 2019. So you'd think perhaps if that was known, maybe Sajid Akram would not have had a gun license anymore. To your second point about anti-Semitism, though, yeah, that is a fast-growing debate. Did the government do enough? Many Jewish communities say they have been warning about this. Nothing was done, and now we see the consequences.
So Albanese under a lot of pressure. What do we know about how he might be looking to contain or address the fallout?
Well, yesterday he attempted to contain it by acknowledging the hurt of the Jewish community, saying that the government stood with them, that anti-Semitism was a scourge, but today was the day for national unity. That debate's not going to go away, however. We heard from a broad variety of voices yesterday that saying Australia has not done enough to combat anti-Semitism, those voices coming from both within and externally from the country as well. And Jewish groups say, look, the problem had been building and nothing got done. There were frequent stories about arson attacks, vandalism attacks at synagogues in Sydney and Melbourne and other places that the Jewish community frequented. And the community feels that not enough was done to address that. That debate, once the initial shock has subsided, it's not going to go anywhere. It'll probably only get louder, Avril.
Yeah, certainly one that will continue well into next year, we're sure. All right, Bloomberg's Poole Allen there. We'll have much more ahead on the Asia trade. This is Bloomberg. We just got some breaking news this morning. Australia's December consumer confidence figures have been released, and we've seen a deterioration essentially from the month prior. So taking a look at the reading, it's a contraction of 9% rather. The prior reading had been for a gain of nearly 13%. But certainly consumer confidence has also been really reflecting or reacting to this new pivot from the RBA and this indication that maybe the brief easing cycle that we've seen has come to an end, and there's a potential to return to interest rate hikes even perhaps in early 2026. So yes, a contraction in terms of sentiment, and pessimists once again outweighing the optimists in this as well. But Avril, also taking a look at what's happening with Tesla and the rally we've seen in that stock as well.
Yeah, this is a stock that outperformed despite the declines in tech overnight, at one point jumping as much as 5%. So it hit a record, and this is for the first time since December last year. This is a stock that's had a really rough time in 2025, slightly because of these valuation concerns, but also that really public spat between Musk and Trump. But more recently, investors have been helping the stock to rebound given its robo-taxi wait-and-see strategy. They're taking a second look at Tesla. And we are watching, of course, whether this will boost some of these EV suppliers of Tesla in China and in Korea in the session as well. In the meantime, Ford will take $19.5 billion in charges tied to a sweeping overhaul of its EV business after struggling for years to make it profitable. Speaking with Bloomberg, CEO Jim Farley says the overhaul is about moving towards more profitable vehicles.
You know, we saw hybrids really take off the last couple of years, like, you know, last month we had a 30% increase in our hybrid sales. We're now number 3 in I think we're 80% hybrid market share in trucks. So we saw this happening. We also saw the more expensive EVs, you know, really suffer in the market and the more affordable EVs to do better. And then the last couple months really was remarkable. The EV market in the U.S. went from 12% in the industry to only 5%. And that really, in the end, was the big decider for us. But look, we're going to 50% electric. It's going to be hybrids and E-revs and electric. It won't be just pure electrics.
So, you know, every good trader knows you got to cut your losses when you recognize there's an issue. You're doing that in this sense with the F-150 Lightning as we now know it, and the T3 project, the next generation truck that would have been built in Tennessee. But you're able to, I guess, salvage some assets, and as a result, you've raised your profitability forecast from $6 to $6.5 billion for this year in terms of EBIT to $7 billion. Where are you gaining an opportunity from this, Jim?
Well, great question. This year, in the short term, it's really our cost of our company. Our quality is getting better, and so our costs are much more competitive. In fact, the Novelis aluminum has cost us more like $2 billion, but we're still raising guidance. Look, for this announcement, Matt, it's really about moving to more profitable vehicles. You know, we're going to make in Tennessee now an affordable pickup truck. I think it's going to really surprise the market. These are customers we know. Not a lot of guesswork in terms of the revenue, the cost we need to get at, and a more affordable van in Ohio. So these are going to be better investments for the company profit. And all those hybrid sales, you know, those are really profitable vehicles for us as we basically deploy hybrid across our lineup. But we're also going into the energy storage business to 20 gigawatt hour. You know, that's a big move. We're going to convert our battery plants from automotive batteries to energy storage batteries using LFP. That's also a big pivot that is profit positive for the company.
That was the Ford CEO, Jim Farley, speaking with Bloomberg's Matt Miller there. And some of the stocks are going to be watching when we get the open in Korea and also Japan at the top of the next hour. But LG Energy Solution in Seoul is certainly one of them because it actually gets over 5% of its revenue from Ford. And it'll be interesting to watch, given, yes, you do have Ford deprioritizing their EV series and shifting instead toward gas and hybrid vehicles, but still looking into energy storage as well, Avril.
Yeah. Talking about these shifting priorities, Belle, it's also been quite interesting. We've seen firms turning more cost conscious, and that seems to have had ripple effects into even the likes of McKinsey consulting firm, right? Sources telling Bloomberg that against the backdrop of its revenue growth having flatlined the past couple of years, there is some sense that they could be cutting jobs by the tune of a few thousand, and that could be staggered over a period of 18 to 24 months. And what we know is how the leadership of McKinsey has been discussing cutting about 10% of headcount across some of these non-client facing departments. So certainly companies are pivoting amid a changing landscape, Belle.
Yeah, that's right. And I think to your point around headcount, we actually had seen it climbing for McKinsey over a period of several years. So in 2012, for instance, it was around 17,000. But then moving forward to 2022, it was as high as 45,000. Now you're around that 40,000 mark. But certainly there's a lot for the company to contend with. Not only has it had very close ties to opioid makers or to some of the world's biggest opioid makers, it's been forced to pay big fines from that. It's also had to really defend its engagement with governments in Saudi Arabia and also China to the US as well.
Yeah, Belle, speaking of China, let's turn to one property developer that has been in the spotlight there. Distressed developer China Vanke offered creditors better terms on its request to delay payment on a bond after creditors rejected its initial proposal. For more, let's bring in our China correspondent Mimin Loh in Hong Kong. So, Mimin, tell us more about the details of this proposal.
Yes, Vanke has told bondholders that it will pay the interest on a bond that is due on December 15, which is yesterday. It will pay that next Monday, December 22nd instead. And it's also calling for the 5 business day grace period to be extended to 30 trading days. The principal will still be paid 1 year later. Now, Vanke is going to hold a bondholders meeting on Thursday to discuss this revised plan. And this comes after its initial plan to delay the bond payment by a year had been rejected. It didn't get the required 90% support from bondholders. The initial plan didn't have any upfront payment or installments, but this time Vanke is saying they will provide some credit enhancement without elaborating on what that is. So from now until next Monday, it will have to make the payments if no other agreement is made. Otherwise, bondholders can call default, which is quite an unthinkable situation for a company that was once the largest developer in China by sales.
How's that going to have then a bearing on the broader housing market in China, especially when you stack it up against the property data we got yesterday?
That's right. Certainly is very concerning because I think investors will be concerned about the upcoming bond payments as well, because it has 13 billion yuan of bonds that are due by June next year. It has $1.3 billion of offshore bonds as well that are due. But more broadly, if Vanke defaults on this bond, it really could pummel confidence in the state-owned companies, because so far the property crisis had been restricted largely to the private companies, which saw about 29% decline in sales this year, but state-owned companies only saw about 9% decline in sales. So what does this mean then for consumer confidence, right? Will home buyers still be willing to buy from state-owned companies, whether it's centrally government-owned or local government-owned? So that is the big question here. And for a long time, Vanke has been protected by this perception that the state-owned investor, Shenzhen Metro, would come in to bail it out. But Shenzhen Vanke has provided about 30 billion yuan in shareholders' loan to prevent a default so far. But lately, the company has been tightening borrowing terms, and that really rang alarm bells among investors as to whether or not the government is now shifting its stance. And it seems like Vanke is being left on its own to clean up this mess.
That was our Bloomberg China correspondent Mimin Loh there. And quick check rather on markets, because we're half an hour into the session so far for the ASX 200. But taking a look what's happening in FX markets this morning as well, we're not really seeing too much movement. The dollar generally has been just declining into the delayed payrolls figures, but certainly that's going to be the key one to watch in terms of what does the Fed do going into 2026. The Japanese yen there, you can see around that 155 mark, but it has been outperforming peers against the greenback in the group of G10, but markets are certainly pricing in that likelihood we see the BOJ hiking rates later this week. We'll have more ahead on the Asia trade. This is Bloomberg. Well, the Netflix co-CEOs Greg Peters and Ted Sarandos are trying to reinsure employees' concerns about the company's bid for Warner Brothers Discovery. They've been reiterating that there's no business overlap and therefore there won't be any studio closures. Let's get more with our Bloomberg entertainment editor, Chris Palmieri, who joins us from LA. And Chris, just break it down for us. What are the concerns that we're getting from Netflix employees, and what's been the response then from management?
A couple of things. What the co-CEOs said today was, one, they're going to continue to release Warner Brothers films in theaters. That's a big concern for Hollywood, particularly movie theater owners. because Netflix model historically has been to put the films in theaters just for a short period of time, just to qualify for awards, and then release them simultaneously on their streaming service. That's number one. The other big issue they really looked at was the future of the Warner Brothers studio, the physical lot, and all the employees that work there. And their point was that we don't already have a lot like Paramount, say, would. And so we're not going to be firing legions of people when we do a deal like this. We're going to build on the employees and the physical assets that are there.
Where are we on the regulatory scrutiny for each bidder?
Well, regulatory scrutiny at this point is just a lot of speculation because we don't have a winner for sure. But right now, Warner Brothers had 10 days as of last Monday to respond to Paramount's latest offer. And we're expecting that to come this week, probably Wednesday. It's likely Warner Brothers is going to say, no, we're sticking with Netflix, in which case the ball's back in Paramount's camp. Everyone expects Paramount to raise their offer price a little bit more.
Another big story last week in terms of Hollywood entertainment business was also this OpenAI licensing Disney characters. But we're getting more deals now, details now on the terms of the deal. What exactly can you tell us?
So we were the first to report today that under their agreement, Disney isn't getting paid for the licensing of their characters. The announcement last week was that some 200 characters were going to be available for people to use in AI video creations. And instead, Disney's getting paid in stock in OpenAI. That's the terms of the deal.
Chris, thanks so much. Media and entertainment coverage editor Chris Palmieri for us. Speaking of deals, Bloomberg has learned Mitsubishi UFJ is nearing a deal to buy a minority stake in India's Shriram Finance. That would make it the latest foreign bank seeking to build a presence in the world's most populous country. Our Asia Investing and Finance editor Russell Ward joins us now. So Russell, talk to us about the deal. What is MUFG likely going to get if this goes through?
Morning, Avril. Yes, so Shriram Finance is one of India's biggest non-bank lenders. They have a pretty big presence in areas like financing for motor vehicles, for homes, even financing for gold and small business lending as well. So they have a market cap of about $18 billion. And what we're hearing from people familiar with the matter is that MUFG is looking to get a 20% stake that would be worth more than $3 billion. So it would be a pretty big deal for MUFG, and it could be clinched or announced as soon as this week, according to the people familiar.
What's the rationale for entering or targeting the Indian market? Because we've seen a number of Japanese lenders doing this.
Absolutely. So Japanese banks have been expanding abroad for many years now. They were targeting Southeast Asia and really having made a lot of deals in that region. They've sort of moved on and now are looking into India. So MUFG is just the latest. We've had Sumitomo Mitsui being pretty active in this space earlier this year, clinching a stake in Yes Bank. SMFG had also bought a stake in Fullerton, which is a consumer finance company. It's laid out about $5 billion in investment in India in recent years. And then you've got Mizuho, which is looking at more expanding in the corporate investment banking space. It's been in talks to buy a local investment bank called Avendus. The CEO was on Bloomberg TV last week, actually, of Mizuho, saying that they're hoping to have some positive news on that front in the coming weeks. So MUFG is really the latest in a long line. The three mega banks have also been big lenders in foreign currency lending in India and facing pretty stiff competition in that space. So they really want to hold on to their presence there.
Russell, thanks so much. A lot of deal-making activity coming out of Japan. Our Asia Investing and Finance editor Russell Ward in Tokyo. Now, also in Japan is, of course, BOJ week. We have the finance chief Katayama talking about how the government and the BOJ share a view on the state of the economy. So it looks like all systems go for the hike this week. But where do we go from here? Taking a look at dollar yen, it's hovering steady around the 155 handle. Let's bring in Bloomberg M Live strategist Mark Cranfield. So, Mark, last BOJ meeting for the year, and it looks like all systems go, finally.
I can't believe you're not going to be around to
to cover that.
It's an almost impossible job for Governor Ueda to thread the needle here. He's got to try and convince investors in Japanese bonds that raising the target rate to 0.75 when core inflation is running at 3%. And he's going to have the data just a few hours before the Bank of Japan give their decision. There's going to be a fresh national CPI report number. It's likely to show that inflation hasn't really changed very much. It's still very sticky, and yet their target rate is miles away from where the inflation level is. Now, in most parts of the world, that negative real rate picture plays out in a weaker currency. It doesn't help the long end of the yield curve as well. Plus, this particular hike has been so well telegraphed, unusually far in advance for the Bank of Japan's point of view. Everybody's expecting it to come, but they've seen the timetable of the previous hikes under Governor Ueda, well spaced out, several months between hikes. This will be the second one this year. The last one was in January. So nobody is expecting that the next one, which is certainly due based on the inflation data, will come until maybe the middle of next year. All of that is going to play into a market which already thinks that JGB yields are not fully reflective of the situation in Japan. Very tough job for him. We'll probably see JGBs decline a little bit more and the yen under pressure, even if the hike comes as fully expected.
So does that mean we're going to have to wait quite a long while for any breakout in dollar yen?
Dollar yen is going to what's happening there is more on the cross rates. People are using the yen as a funding currency. Against the dollar, it might get a little bit of reprieve simply because the Federal Reserve has started mini QE there, which is going to undermine the US dollar. Look at the yuan, it's powering ahead. The euro is picking up steam as well. The dollar is generally under pressure, but the yen is the next weakest one. It will probably lose against the euro, against the pound, against the Aussie. Most of those traders will be looking to use it as a cross-rate play, and the yen will probably stay relatively weak. It might go down a bit against the US dollar, but it will lose out against the other major currencies.
What about what we're hearing on the yuan in particular, given that you've also seen that record move essentially against the Japanese yen, but just reading about this rising number of Chinese economists, former central bankers as well, that are arguing the case for a stronger currency. Is that what's needed here, do you think, and is that what's likely?
The central bank, the PBOC, has made it pretty clear that for now they're very supportive of a gradual appreciation of the currency. They use their daily fixing as the signal to the market. That's how traders understand where the central bank thinking is. And it's been pretty consistent over the past few months. They've gradually been lowering down that target rate. It tells people in the market they're very comfortable with dollar yuan moving lower. Interestingly, if you look at it on a basket basis, the yuan is actually relatively weak against a whole number of currencies, but it's doing pretty well against the US dollar. They're happy to continue that to be the case. China doesn't want their currency to be too strong overall. They obviously need exports to Europe and the rest of the world. Asia as well. You can see that it's lagging to some extent around there. But against competitors such as Korea and Japan, it's holding up pretty well on that space. Overall, the currency is in a pretty medium kind of a place. So it's not too hot, not too cold. But the highlight will be against the US dollar. We're probably going to go below 7 to the dollar. As long as the euro continues on its path, the yuan won't be too far behind, unless China ever needs to use it as a trade war weapon. That's not the case right now, but they always keep it in their back pocket. Anytime friction happens on the trade front, they can always suddenly start to weaken the yuan. That's not what they're doing right now.
Yeah, and as you say, maybe going below that 7 handle, I guess it also comes down to the direction of the greenback, which is already weakening ahead of the US jobs data that's out later. So what are you expecting there? And as well, how does that set the trading direction?
There's a lot of data to absorb. People have already made up their mind to some extent that from the jobs point of view, it signals the fact that the Federal Reserve were justified in lowering interest rates. They may be able to do so again. But there's a pretty long way to go before that January meeting. There's plenty of time for Federal Reserve speakers to come in and give their views. And you can tell it's a very mixed Federal Reserve, which is making it more difficult for investors to decide who's going for the rate cuts and who wants to stay on hold. This data, in a way, is not going to help very much. It's going to muddy the picture because so much of it is out of date. It's not very well collected. The quality of the data will be under suspicion. So it's very tricky for investors to get through it today. They'll probably just be relieved it's out of the way. We can look ahead, hopefully, to a clean slate in 2026. By the time we start the new year, the data should be up to date, and by then traders can make a more informed decision. Right now, they can't really.
Yeah, hopefully all this is behind us by then. Mark, always great to get your analysis. Thank you so much. A Bloomberg and Life strategist, Mark Cranfield. We have more ahead on the Asia trade. This is Bloomberg.
Latest on the corporate front this morning, and Reuters is reporting that NASDAQ is planning to submit paperwork with the U.S. Securities Commission to roll out round-the-clock trading of stocks. NASDAQ plans to expand trading hours for stocks and exchange-traded products from 16 hours to 23 hours, 5 days a week. Under the new plan, the trading week will start on Sunday at 9 p.m. and end on Friday at 8 p.m. PayPal's applied to become a bank in the U.S., looking to take advantage of the Trump administration's openness to fintech companies entering the banking system. The payments firm says that if approved, a PayPal bank would help strengthen its small business lending capabilities. JP Morgan and the U.S. government are backing Korea Zinc's planned smelter in Tennessee, which will supply critical minerals essential for chip making, defense, and aerospace. Construction is expected to begin next year, with commercial operations starting in 2029. We'll have the market opens in Seoul and Tokyo next. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens, and we're expecting to see the tech sector coming under further pressure in this part of the world, following on from what we got in U.S. session. Trading was quite tepid in terms of that selling continued on the tech sector, although the likes of Tesla did outperform. We are also seeing the dollar coming under pressure still. Bonds also, maybe in the week with all these macro events, not just the U.S. data, you have Fed speak, you have the BOJ as well. All that is in play. So investors seem to be booking profits, taking money off the table for the moment ahead of these macro events that could shape as well what we get in the first half of next year. In the early goings, you are seeing the Japanese benchmark looking a bit softer. It's extension of the declines from a day ago. Dollar yen, I mean, we've been talking about how the government's emphasis on BOJ independence has really unlocked this idea that the central bank can go about with its hikes and normalization of policy. But to what extent is that going to allow dollar yen to break below what we're seeing today? 155 is where we are steadying on. We are still seeing the upward climb in yields in Japan. Take a look at Korea, where I think the tech team has been playing out this week. It's also an extension from what we saw last week. For the moment, you're seeing a bit of a rebound on the Kosdaq, not seeing much direction. Dollar Korea won also looking flat. That brings us to what we're seeing in treasuries. We are seeing that expectation of a continued steepening, perhaps. Maybe you see more of that demand on the short end. Again, looking at the dollar coming in quite soft. It is a big week when it comes to data out of the U.S. You've got the payrolls for November along with the jobless rate. And then we also have some CPI numbers. Let's bring in Isaac Poole, CIO at Ascalon Capital, for an analysis and the outlook for what's to come in 2026. But Isaac, always good to see you. Talk to us about what you are positioning for this week and the extent in which you're putting weight on the data.
I think that the data is still very important, albeit a bit stale in some senses, but we will start to get an idea of just how quickly the US labour market is slowing. I think the trend there is very clear. It's showing up in the private sector data, and to the extent that it surprises to the downside, I think there's a real risk there that equities, which have really been banking on a big re-acceleration in earnings and growth, could just be wrong-sided and wrong-footed by the data this week.
Yeah, I remember when we spoke to you, I think this was sometime in September, you flagged, you were underweight equities. It was about the valuation risk. We've kind of seen how it's panned out as we approach the end of the year. What is that, assessment to you as an investor? Is this time to pick up a bit more tactically, or are you staying away?
I really think it's not time to chase the dips or buy the dips at the moment. I would approach the end of the year and early next year with an abundance of caution because the valuations are so stretched relative to history. There really will need to be not just good earnings growth next year, but re-acceleration in earnings growth to justify the valuations that we're seeing at the moment. And as we've come through, particularly the second half of this year and into 2026, there are just no clear signs that we're going to see that re-acceleration, whether it's in economic growth or in earnings growth. So as we're looking at equities, we look across the US, but also other major developed markets, and think that this is a time to be a little underweight equity risk, either in absolute terms or by taking lower beta exposures, just to try and provide a little bit of resilience given the eye-watering valuations that we see at the moment.
Which are the other DM equity markets that you're underweight a bit on?
Yeah, we're a little underweight the Europe, and we're underweight Australia. We've been quite diversified across our global developed market holdings and been very careful about really targeting quality and value within the equity sleeves. But overall, as we've seen this year, that diversification has really been a benefit to portfolios. But we still think that the valuations are just not compelling enough and the outlook is just not solid enough to move back towards a neutral stance just yet.
What is the strategy for you in fixed income?
I think fixed income has been so important this year, and it's shaping up to be even more important next year as the Fed looks somewhat less certain on its policy outlook. In Australia, the RBA looks a little less certain, same with the ECB. We've really preferred to move up quality in fixed income, so that means selecting investment-grade credit and specifically short spread duration over high yield. There's been very good absolute yields on offer there and a little bit more downside protection compared to high yield. And then in the govies space, we've really wanted to be short of duration. There's still a lot of risk as you move out the curve from sticky inflation, from the less certain pathway from the Fed, from fiscal uncertainty in the US. All of this suggests that the curve could bear steepen, and we really want to be a little bit short on the duration side there.
Isaac, I want to ask you about New Zealand as well, but hold that thought because we have some Treasury Department economic projections from New Zealand, and it's telling us that it sees slower economic growth this year and then a rebound following on from that. And the government also expects to see a later return to a budget surplus. So it's this idea that maybe the long end could continue coming under pressure globally as well. We are seeing the Kiwi against the greenback maybe firming up a little. Isaac, I wonder if you could, react. How are you expecting perhaps global debt as well, as we see a sort of hawkish turn among some of these developed market central banks?
This is a challenge because inflation really did not get under control globally, whether you're talking about Oceania with Australia and New Zealand or the US, and that's wrong-footed central banks a little bit at the moment. They've wanted to cut rates. They want to cut rates to protect the economy, but that sticky inflation is making it challenging. And then you throw into the cauldron there the fact that governments continue to spend. There's not a real clear signal anywhere, I think, in the developed markets that governments want to get their debt levels under control or their deficits under control. And that does just continue to put that upside pressure on global longer-dated yields. And we've seen that in the volatility that we've had this year. We've seen that in the sell-offs we've seen over the last couple of months. And I think that's going to be something that will persist through 2026 and make that fixed income selection within portfolios really critical in a way that it probably hasn't been over the last 12 months.
Isaac, what about the moves in the dollar and gold this year? Do you also see a similar theme persisting?
I think that gold is really a risky position at the moment. We've seen non-traditional buyers really come into the gold market, and by that I mean retail buyers. Last year, or the last 18 months, as gold pushed higher, there was a lot of central bank demand. There was a lot of traditional demand in the consumer sector. But at these prices, that's starting to dissipate. And the people who are coming in to buy it are the ETFs and the mums and dads in the retail market. And we know when we look back over the last 20 or so years that gold has a habit of turning lower. And when it turns lower, it does so quickly and it does deeply. 40% falls are not at all uncommon. And I think that right now at these levels, you want to be extremely cautious with gold. There's an analogue there with the US dollar. All the negative sentiment around the US dollar at the start of this year has given way to a pretty tight range for the USD. And I suspect as the Fed becomes a little less certain, there is real scope for the US dollar to strengthen up a little bit, not just at the back end of this year, but probably through the first half of next year.
Isaac, we'll leave it there for today and I guess this year. See you in 2026. Really good to get insights from you. Thank you for your time. Isaac Poole is CIO at Ascalon Capital. Now, also in the session today, let's take a look at some of the movers among the stocks that we are watching, including Korea Zinc. And this is after a $7.4 billion plan unveiled for a Tennessee smelter. And we are seeing the stock coming under pressure for the moment. We are also tracking the forward suppliers, including LG Energy. Of course, this is after we got the reinvigoration or the change in plans for Ford in terms of whether it's still going to be making these big bets on electric vehicles. LG Energy is responsible for about 5.75% of the Ford business, and it's the fourth largest customer next to the likes of GM, Tesla, Volkswagen. So we are seeing a bit of pressure coming on LG Energy as well. We have more ahead on the Asia trade. This is Bloomberg.
I think we're closer now, and they will tell you that they're closer now. We had numerous conversations with President Putin of Russia, and I think we're closer now than we have been ever.
President Trump there on talks to end Russia's war in Ukraine. And as we speak of this potential end to a protracted conflict, there's been some sense in commodities markets of an erosion of the risk premium. So we're looking at the lowest since May on WTI, thereabouts. Brent crude futures also hovering at the lowest since May this year. U.S. negotiators have offered more security guarantees to Kyiv as part of Washington's push to end the war. Bloomberg's Michael Heath joins us now. Mike, Talk to us about the backdrop now. What's at stake for Ukraine, the extent in which it could get these security guarantees, and whether there is any way that it could shift its red line, territorial concessions.
Yeah, Avril. I mean, it is significant what's happened, because what our understanding is the US has offered Ukraine a version of Article 5 guarantees, which is what NATO has. An attack on one is an attack on all, which is what Ukraine has sort of been seeking. If it can't be in NATO, it needs that sort of US guarantee, because the US is still the superpower, and if you've got that, then nobody's going to attack you. So it is a significant step forward, and Germany's Chancellor actually said as much in that sense. The question, exactly as you say, is about whether Ukraine is willing to give up territory that it still controls, that Russia is, and that Russia's army hasn't managed to take, but the Kremlin says is insisting on in order to have a ceasefire. Now, Ukraine is sort of constitutionally, it can't do this, but there has been talk that perhaps there could be a referendum, where these questions are put on it. And that might be a way through. They're sort of trying to find fudges there, but underlying it all, it just seems very, very unlikely that Ukrainians would be willing to give that up. I mean, they've sacrificed so much to hold the line here, and Russia, after 4 years and throwing so much, all that old Soviet power against Ukraine, still hasn't managed to get it. So it'd be a really tough decision. All that said, when you're making peace, you're obviously dealing with with your enemy, someone you hate, and you've got to make compromises. So this is the real, as you called it, the red line, and that's going to be the tough one for Ukraine to get around. The other side of it, of course, though, is that as the US sort of does these things with Ukraine, US and Europe, it often ends up dragging their position further away from what Russia might find acceptable. That said, if there is a solution to these territorial demands, you'd imagine they could wrap the rest of it up. But that is the big question.
How significant is it, Zelensky talking about how there's some agreement with the US on future security votes in Congress?
Yeah, well, I mean, it's very, very hard to sort of understand how all that will work. I mean, to some extent, you'd imagine that if the administration has got an agreement here, that Congress is going to be reasonably pliant. I mean, a lot of people do support Ukraine there. It's mainly President Trump and the whole MAGA idea that or really President Trump, let's be honest about it, that is inclined more towards Russia. I mean, the traditional US position would be that they support a European democratic state that's been, a sovereign state that's been attacked by an aggressor for no reason whatsoever. And the attacker is a dictatorship as well, and a historical enemy too. So it's President Trump who sort of turned that. You'd imagine that Congress and US lawmakers would get behind any agreement that gave Ukraine some security assurances there. But again, there is still lots to play out, and we sort of seem to be getting down to the nitty-gritty. But as the Europeans also said, the decision on this is going to come from Russia. I mean, they sort of feel like they're getting close to a real position where they can put forward, or a proposal they can put forward. It's whether Russia's prepared to bring an end to this.
Mike, thank you so much. As always, Michael Heath with the latest on this. Now, as maybe some investors bet of a prospect of an end to the Ukraine-Russia conflict, what's also been interesting is defense stocks and how their perhaps demand for them has been eroded a little. We are seeing the likes of Hanwha Aerospace down in South Korea. We have more ahead on the Asia trade. This is Bloomberg. Take a look at where Bitcoin is trading following its drop below the $86,000 handle for the first time in 2 weeks. We are seeing a bit of a bounce for the moment, and investor sentiment has been weakening as the cryptocurrency slips deeper into bear market territory. Garfield Reynolds, who leads our MLive Asia coverage, joins us now. So Garf, we've been seeing maybe as the risk rebound comes through, that Bitcoin for a while now hasn't come back along with that, has that relationship just broken down?
Well, I think to some extent that's true. There are also sort of various idiosyncrasies about the crypto space that are carrying more and more weight. And a poster child for what's going on is what's been happening with Strategy, which was the sort of groundbreaking digital treasury asset company. The idea being that it just raised cash via share sales to buy Bitcoin, and somehow that ended up giving it a valuation that was above what would have been indicated by its underlying Bitcoin holdings. That premium has just about vanished, and now we have news that they just bought a bunch of Bitcoin over the last week or so, and they bought all of that at the price of 90,000 or so, it would look like, just based on looking at where Bitcoin was trading over that period from December 8 to December 14. So if they did buy it then that particular bet is underwater with it down at 86,000 or so. And Bitcoin and the rest of the space just seems to have lost what used to be its seeming inevitable capacity to suddenly jump and reward people who had been holding it, waiting for that sort of jump. Right now, there's more of a grind lower and much less of those breakouts to the top, which had helped to keep retail traders very much engaged with crypto as something that would pay off big time sooner or later.
Yeah. What does this mean for some of the other smaller cryptos, such as Ether?
Well, I mean, they're in the same basket with it. Ether, for example, isn't the subject of Strategy, but there are, I think, other digital asset treasuries that do hold some Ether, but then once you get to smaller ones, not so much. But having the big boys, as it were, lose their mojo is not much of a help. There's also the overall concern for crypto that we have moved from a global regime where developed markets were expecting rate cuts, even if a slower pace of rate cuts going forward. And just over the past few weeks, we've shifted so that rates traders are now betting that the average cash rate across developed markets is going to be higher in a year's time than it is now. So if you've got a tighter policy regime, you've got, at the very least, no more lowering in borrowing costs, and in fact, the potential that borrowing costs are going to go up. If we do get some serious tightening cycles breaking out elsewhere than Japan, we could get some quite extensive increases in borrowing costs. That is going to weigh on risk assets in general and on crypto in particular, because crypto famously does not offer interest, well, mostly does not offer interest payments that can protect you against an increase in broader borrowing costs.
Garth, thank you so much. Garfield Reynolds, who leads MLive's Asia coverage. Now on to some top global headlines we're following. The UK has finalized a free trade deal with South Korea that London says will boost exports to the Asian market. The agreement comes just weeks before an earlier deal was set to expire. The UK says the deal will grow its services exports by more than $500 million as firms get improved access to Korea's financial market. President Trump says he feels bad about Jimmy Lai's conviction in a Hong Kong trial. He says he's reached out to his Chinese counterpart, Xi Jinping, to consider Lai's release. The former media mogul was found guilty on Monday in a landmark national security trial and could face life in prison for conspiring to collude with foreign forces. The Chinese ambassador to the UK has also lodged a protest after UK Foreign Secretary Yvette Cooper called for Lai's immediate release. President Trump is classifying fentanyl as a weapon of mass destruction in his latest push to ramp up pressure on Latin America over drug trafficking. Trump allies say such a move can open up access to funds appropriated for detecting and eliminating weapons of mass destruction. The president says he's also considering an executive order for federal agencies to reclassify marijuana as a less dangerous drug.
That's why today I'm taking one more step to protect Americans from the scourge of deadly fentanyl flooding into our country. With this historic executive order I will sign today, we're formally classifying fentanyl as a weapon of mass destruction, which is what it is.
Is it accurate that you are considering an executive order to reclassify marijuana under the control?
We are considering that, yeah.
Are you planning?
Because a lot of people want to see it, the reclassification, because it leads to tremendous amounts of research that can't be done unless you reclassify. So we are looking at that very strongly.
Meantime, we're also hearing that President Trump has sued the BBC for $5 billion over a misleading edit in a documentary last year that gave the impression that he'd made a direct call for violence in a speech. And this was, of course, leading up to a 2021 attack on the U.S. Capitol by his supporters. Now, let's take a look at how U.S. assets are faring across the board. We, of course, saw Wall Street coming under pressure. Tech was what led the selling as we brace for data out this week, waiting out for November payrolls, the jobless number. Later in the week, we also get retail sales, the CPI prints, but questions linger about the quality of this data and the extent in which that's going to be, of course, influencing a very divided Federal Reserve. For the moment, you are seeing a bit of gains on the U.S. 10-year dollar still coming under that bit of pressure. And this is also against the backdrop of the gains that we've been seeing on the Japanese yen. We have more ahead on the Asia trade. This is Bloomberg. We have breaking data crossing the terminal out of Japan for the month of December, and we are seeing a bit of improvement when it comes to manufacturing for S&P Global Japan PMIs. 49.7 is the number, so an improvement from 48.7, which was the prior reading, but this is still stuck in contraction. And in terms of services, 52.5 expansion, but it is at a slower pace than the prior reading. Overall, though, we have been seeing the business conditions, the confidence, especially in manufacturing, following on from that trade truce that's helped to increasingly support the view of a BOJ that can continue its normalization of monetary policy. Now, staying on Japan, Bloomberg has learned that Mitsubishi UFJ is nearing a deal to buy a minority stake in India's Shriram Finance, and that would make it the latest foreign bank seeking to build a presence in the world's most populous country. Our Asia Investing and Finance editor, Russell Ward, joins us now. So, Russell, talk to us about what we know about the terms of this deal.
Morning, Avril. So MUFG, what we're hearing is that MUFG is in advanced talks to buy about a 20% stake in Shriram Financial. This is one of India's biggest non-bank lenders, lends for everything ranging from motor vehicles to homes to even gold and small business financing as well. So MUFG in advanced talks to get a 20% stake. That would be about more than $3 billion worth. So it would be a big deal for MUFG. And really, as you said earlier, the latest Japanese bank to be investing in a big way in India.
Yeah, what is the opportunity that these Japanese lenders see in the world's most populous country? Why are they targeting this market?
Yeah, well, I mean, the Japanese banks have been expanding overseas for more than a decade now, really to chase opportunities in faster growing markets than Japan. And so they initially targeted Southeast Asia. They've been buying stakes in banks in Indonesia and Thailand and other places in that region. And now they're turning their attention to India. And one of the biggest players among the Japanese banks expanding in that country has been Sumitomo Mitsui. That bank has invested more than $5 billion in the past few years, bought a stake in a consumer finance company a couple of years ago. Earlier this year, bought a stake in Yes Bank. That's the bank that got a state bailout a few years ago and has turned itself around. Mizuho, the other of the three mega banks, is looking more expanding on the corporate and investment banking side. That bank is, we've heard and have reported that it's in talks to buy Indian investment bank Aventist. And the CEO came on to Bloomberg TV last week, actually, to say that they're hoping to announce some good news on that front early in the new year. So we'll be watching that space as well. But for now, we're also watching MUFG to see whether that deal that we've reported overnight will be announced in the coming days.
Amid this deal-making activity among the Japanese lenders, Russell, I wonder if you could also weigh in on the prospects for these mega banks in Japan as we watch for this BOJ hike this week. What is 2026 going to look like for them?
I mean, it's looking pretty good. Last year was around a record profits for those three banks, and now they've just raised their profit forecast to fresh records in the last round of earnings. And really, that's on the back of the higher lending income that they've been enjoying because of the Bank of Japan's rate hikes. And of course, with the Bank of Japan set to raise interest rates again to 0.75%, that hasn't been seen for many, many years here in Japan. That's also another tailwind for the banks going forward. And, you know, corporate activity here in Japan is really helping them out as well. There's a lot more deals to be done. Companies are looking to sort of revamp their operations, and banks, as well as the investment banks, the securities firms, finding themselves with key roles on those deals. So there are a lot of good prospects here in Japan, and you know, I think the outlook is looking pretty good.
Russell, always good to get insights from you. Thank you. Our Asia Investing and Finance editor, Russell Ward in Tokyo. Turning to China now, developer China Vanke is said to be offering its creditors better terms on its request to delay payment on a bond that was due on Monday. Creditors earlier rejected its initial proposal, setting the stage for a potential default. And Bloomberg Opinion columnist Shriram says that might not be the worst outcome for creditors. And she joins us now. So Shuli, Vanke has been offering some sweetness, also proposing to meet with bondholders later this week. They want to discuss the new plan. You think it's better that these bondholders reject the plan and actually edge the developer into a default. Talk to us about the thinking behind this.
So Vanke is offering paying a 3% interest to its bondholders in a week. But what is 3% if you are at risk of losing everything? What's happening with Vanke is that there is a little bit of a creditor-on-creditor crime in that the biggest creditors are basically in this land-grabbing mode, trying to claw out as much as asset as possible. And in fact, Shenzhen Metro, Vanke's biggest shareholder, with 27% stake, in early November said that they wanted Vanke to retroactively put collateral on 20 billion yuan worth of unsecured shareholder loans. And in fact, they have taken Vanke's entire stake in property management company Wanwu, and that's possibly Vanke's most valuable and liquid asset. So what's happening now is that if bondholders wait, and if Vanke was allowed to continue business as usual, all the assets will be gone. So it's perhaps better that the Vanke goes into default now, and then we start to have liquidation through the court process, and then everyone gets some share of Vanke's assets.
Yeah, maybe it makes sense to just bite the bullet for now. But talk to us also about how it's been a bit of a roller coaster year for these Vanke investors, right? You look at the dollar bonds, they were trading at 30 cents in January, and then they kind of recovered throughout the year, then tumbled again. I mean, given the roller coaster ride, what's the lesson here?
I think what's happening is that, global investors, they somehow have this blind faith that Vanke is somehow special. Its biggest shareholder is basically an entity owned by the Shenzhen government. But really what's happening is that the Shenzhen government has never attempted to consolidate Vanke. Shenzhen Metro only has 27% stake. At the beginning of the year, Shenzhen Metro did give a series of unsecured shareholder loans, which investors took as unofficial bailouts. But the fact that they are unofficial, you just have to be a little bit worried, right? By year end, Shenzhen Metro changed its mind and saying, okay, we just don't have so much money because Vanke is ever expanding black hole. Its property sales is expected to decline by more than 40% this year. And then the SOE basically just threw in the towel and say, I'm gone. And now bondholders are basically left with holding an empty bag.
Yeah, it's certainly prompted this rethink of Vanke's position. Shuli, great to have you. Thank you so much, our Bloomberg Opinion columnist Shriram, as we continue tracking the fallout given what's happened at Vanke. On to some top corporate stories we're tracking as well. Nasdaq looking for regulatory approval to extend trading hours on its stock venues to 23 hours during the work week. According to a filing, the firm asked the U.S. Securities and Exchange Commission for permission to add an additional trading session, and this could take effect in the third quarter of 2026, pending regulatory approval. PayPal has applied to become a bank in the U.S., looking to take advantage of the Trump administration's openness to fintech companies entering the banking system. The payments firm says that if approved, a PayPal bank would help strengthen its small business lending capabilities. This comes after a number of cryptocurrency firms, including Circle, Ripple, Paxos, recently gained preliminary approval to become banks. JP Morgan and the U.S. government are backing Korea Zinc's planned smelter in Tennessee, which will supply critical minerals essential for chip making, defense, and aerospace. Construction is expected to begin next year, with commercial operations starting in 2029. The deal is part of Washington's efforts to establish domestic supply chains for key minerals. Meantime, the EU's top trade official says China has started granting longer-term licenses that allow European companies to access critical minerals needed for industries, including clean tech, automakers, defense contractors. Speaking exclusively to Bloomberg, Maroš Šefčovič also discussed ongoing negotiations with the U.S. over steel and aluminium tariffs.
What unites us is that we really need to take care of overcapacities which are destroying, the steel production in U.S. but also in the EU. And I explain again that we adopted these very far-reaching safeguards if it comes to the imports of steel from the third countries to the EU, which are kind of very much reflecting the measures which U.S. has undertaken several months ago. And therefore, I suggested again, let's go back to the idea where we can kind of build this ring of friends, where we would trade on MFN, or zero levels, and we would have the same, let's say, measures to take on the global overcapacities. The situation as it stays right now is that I sent to Secretary Latnik the lists of the codes where we believe that we can definitely lower the tariffs. I understand there is some interest, especially from the machinery sector, but we didn't proceed or haven't proceeded yet to the very concrete negotiations on this type. So we're talking on the level of teams. We are almost, I would say, in permanent contact with my counterparts, and I think this would be good for both sides, because if America wants to reindustrialize, they need machines. We produce the machines. We are ready to send them the machines, but of course we need to find a solution on the derivatives.
And speaking of sort of rare earth minerals, this obviously has been thrust into the sort of the conversation in a very sort of obvious way now by the China. Are we getting closer? Is Europe getting closer to getting a general license from China as the United States has?
Yes, I think that there I can say that we are in very close contacts with Foreign Trade Minister Wang Wentao and also his team, so we are communicating on different levels. We had here the team from China specializing on export controls like a couple of weeks ago, and I think we are getting initial reports from our industry that they are getting these general licenses, but we need to have a little bit more granular information to evaluate the whole process. But the fact that this idea was favorably received, that it seems that we are getting first general licenses, and also that the Chinese side was receptive to our arguments that the process as it was set up in April required too much of I would say, very intrusive information, too many photographs, too much detail about the supply chains, and I think that the general licensing could be one of the solutions how to address this issue.
European Commissioner for Trade Maroš Šefčovič speaking to Bloomberg's Oliver Cook. Now, aside from rare earths, critical minerals, supply chains into and out of Europe, we are also watching the defense sector given developments between the US, Europe, Ukraine and Russia. Euro Stoxx 50 futures pointing to declines at the open. But the broader picture is certainly about the rethink about tech overall. Given what we saw on Wall Street, you are seeing a bit of sentiment being eroded as we approach the end of the year. We have more ahead on the Asia trade. This is Bloomberg. Australia continues to grapple with the fallout from the deadly attack on Jews at Sydney's iconic Bondi beach on Sunday. The attack has sparked debate over immigration, gun laws and anti-Semitism in the country. Paul Allen joins us now for the latest. Paul?
Yeah, Avril, the gun law part of the debate is perhaps the easiest part. I mean, there is a popular misconception internationally that guns are illegal in Australia. That's not correct. Just certain types of guns are. Sajid Akram, who was shot dead by police on Sunday, owned legally 6 firearms. He also a member of a gun club and held a firearms license. So that's led to a debate that perhaps gun laws need to be tightened. Perhaps those licenses should be reviewed periodically if circumstances change. In the case of Sajid Akram, circumstances did change. His son Nazim Akram, it turned out throughout the police investigation, was known to the spy agency ASIO in 2019 over potential Islamic State links. The other change to gun laws would be a limit to the amount of firearms any individual could own. That's getting widespread support from state and federal leaders, but what is going to be trickier is the approach towards anti-Semitism in the country. The Jewish community has been saying their repeated vocal concerns about something like this happening went unheeded. So far, Anthony Albanese has just said he stands with the Jewish community. He describes anti-Semitism as a scourge, but says now is the time for national unity. I want to get a little bit more on this and bring in our next guest. Jillian Segal is Australia's Special Envoy to Combat Antisemitism. Jillian, you were among the many people that were warning the government that something this tragic was potentially brewing. What's your message now?
Well, my message now, thank you for listening to this issue and featuring it. My message now to the government is, and to everyone in the community, that is, firstly, it's a time to come together. And the general community has been, in my perception, wrapping its arms around the Jewish community. We've all received amazing messages of support from all over. But secondly, as well as coming together, it's the time now to adopt, implement, support, and accelerate even the recommendations in my report. I prepared a report on anti-Semitism for the government and gave it to them in nearly 6 months ago, middle in July. And it had a whole series of recommendations, parts of the community to focus on and initiatives. And I've been working on delivering some of those, but I think it could do with a great deal more effort and acceleration. And that's what I'm hoping I will hear from the government soon.
Yes, well, some of the initiatives you mentioned in your report were to do with measures around education, greater awareness, education about anti-Semitism, the history of the Jewish people. Other elements were a little bit more controversial. For example, requiring universities to have a report card around anti-Semitism and tying that to funding. Do you think that that's really a workable option, or do you need to find some areas to compromise?
Well, firstly, that's not quite the way it's framed in terms of the working with universities comes out of a joint parliamentary committee that was commissioned to look at anti-Semitism at universities, and they made a series of recommendations, which I've been working with universities on, and I've appointed an independent person to conduct a review of how they've gone against those recommendations of amending their policies and training about anti-Semitism and complaint schemes and so on, and that will be the subject of a report card. I never recommended that the tying of funding be to the report card. What I had said was if universities, or a particular university, was absolutely recalcitrant and did not cooperate and did not see this as an issue, government should look at funding, nothing to do with me. And so that still awaits as an issue. But my perception is that the universities in different ways have taken this issue very seriously, and certainly the larger universities where most of the Jewish students are have taken it very seriously. And I don't expect that to be an issue. But clearly, where there's teeth in any of the recommendations, it's up to the government to find ways to enforce it. That may be something that they can comment on in their response. But the fundamentals of fighting anti-Semitism through education, both at universities and at schools and in the community through the corporate understanding and in the public sector, are the fundamental issues, because it's a hatred that is, as the Prime Minister says, an ancient hatred, an evil hatred, and a particular scourge. And it's not just general racism. It is based on myths and tropes, and we need to counter them.
Jillian, as we understand it, you spoke to the Prime Minister on Monday. What was the tone? Did he sound receptive to some of these proposals that you're pushing through?
Well, I think the Prime Minister on Monday was in as much shock and disbelief as, many people were that something like this could happen in Australia, and he was incredibly upset. But I have been working constructively with different ministers, Minister of Education, Minister of Home Affairs, in pursuing some of the recommendations in the plan. So I think he is receptive to the plan as a whole, but people have been calling for a sort of general statement of support and an acceleration of that. And that's what I'm hoping we should hear from him about soon.
Jillian, I wonder if you could also weigh in. I mean, among the debates as well in this very serious issue of addressing anti-Semitism is how to distinguish that and perhaps criticism against genocide or racism. What is your take on this?
Well, I think we need to deal with an understanding of hatred and racism generally in every community. We have a range of organisations that have gone into schools and into the community to deal with those issues. And our Australian Human Rights Commission has an excellent framework to look at hatred and racism generally. So I think that's a necessary part of a multicultural country so that we can try and understand each other and not be racist. But anti-Semitism is a particular age-old hatred that goes back millennia, and that is not just simple racism, if I could ever use that term, but is something based, as I said, on historical myths about Jews. And I think to really counter anti-Semitism, we need to understand those myths and where they come from, and that they, in fact, are myths and not truths. So that's why we need specific education about anti-Semitism. So we sort of need a layer, I use the term a layer cake of education, fundamental education about values and about ethics and racism, and then historical contexts about the Holocaust and the way Jews were treated
Jillian.
there, and then anti-Semitism. Yep.
Oh, I'm sorry, it's just sorry, we're out of time. That is Jillian Segal, Australian Special Envoy to Combat Antisemitism. Back to you, Avril.
Paul, we'll have more on Australia ahead as well every Tuesday at 11:40 a.m. If you're watching in Sydney, 8:40 a.m. in Hong Kong. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Greater China markets might be faring this Tuesday morning. We, of course, are seeing those tech concerns continuing to play out. Hang Seng Tech fell, by the most since 3 weeks ago in yesterday's session. We'll see if that continues on today. And this is, of course, against a backdrop of very weak macro data out of China. There's expectation of a consumer consumption-related push from authorities. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. This is Bloomberg.